What's going on, everyone? Gilman with Wellthy Stocks back with another video today, taking a look at something I'm sure all of you guys have seen this week. What's going on with stocks like Gamestop and Koss and AMC. We'll take a look and I'm going to try to explain a couple key things that we need to know from the situation. We'll take a quick look at how the stock's been trading. I'll share some, words of advice. Again, not a financial advisor, do with it what you will, right? So I know a lot of people are confused at what's going on, so we'll cover that real quick and then take a look at that, and I'll kind of share my views on it. So if you enjoy videos like this, don't forget to hit the like button and subscribe to my channel to stay up to date with all the news with the channel. So wasting no more time, let me hit record and we will get right into it. And the first things first, what I want to walk you guys through is what does it mean to short, right? So how do people make money shorting? What it means? Well, it's the exact opposite of going long, right? When you go and you buy shares of Apple or you buy shares of Moderna, Palantir, Neo, cover what the stocks that I cover, you're going long, right? Which means you're betting on the stock price of that company to keep going up. So you buy it for you buy Apple for $100. Next year it goes to 120 and you sell it and you make $20 in the transaction. Well, shorting is the exact opposite of that, right? We're talking you selling a share today, anticipating that it's going to go down in value, and then you can buy it back a year from now for a lower price. So let's run through an example here. And if you're already aware of, what shorting is, feel free to skip through this part, but I know a lot of people are not too familiar with what shorting is. So we'll cover that real quick. Let's say, I'm going to use myself in this example and I'm going to use GameStop, but I never shorted GameStop. I typically don't like shorting stocks. The max shorting I would do would be playing a put here or there, but even that I rarely do. So getting that out of the way, right? Let's say Gilman shorts GameStop stock at $10, which means today, let's say, in a normal world, GameStop was trading at $10. That means I go to my broker, right? Broker gives me one stock to sell, right? I borrow it. I sell it, right? So I'm gonna use Gilman sells the stock for $10, right? So what does that mean? Gilman has $10 and owns -1 shares of GameStop. Okay, that's what. So I got $10. I sold GameStop shares. What does that mean? Now, my goal is, again, I think a company is going to go down in the short term. So best case, right? What I'm hoping for is that, let me do this. So best case for me here is I go back, right, in a year, 1 year from now, let's say 2022, GameStop is at $8. Gilman pays $8 to buy back 1 share of GameStop. So I got $10 today. A year from now, I pay $8. So I'm essentially making $2 in the process, times millions and millions and millions of shares that these big companies short. So that's a quick way to understand what shorting is. Now, the exact opposite of this can happen, right? Which is what we're seeing happening with stocks like GameStop and AMC and Koss and a couple other ones, right? So let's say what's happening right now is if 1 year from now, I'm just going to start typing GME because GameStop is too long to type. GME is at, $15. I still have to buy it for $15. Even though I got $10 for it a year ago, right? So that's something that you have to keep in mind is it doesn't always have to work out for the short seller. And this is where the word short squeeze comes in, right? So short squeeze is what I'm about to describe now. So what happens is, let's say instead of 1 share, right, I shorted 1 million shares, right? So $10 million. When it starts going up to 15, my broker hits me up going, hey Gilman, you sold it for $10, that $15, you're gonna have to cover these because maybe I don't have the difference, right? So maybe the broker is getting worried because technically I'm borrowing it, right? So I owe someone X amount of money. And so now they're like, man, my broker's, forcing me to cover, right? Which a lot of these bigger companies, right, it's a little bit different. I'm just giving you an example of what happens. So now I have to go out in the market and whatever I said, 1 million or whatever shares, I have to buy that, right? So I have to buy at this $15 price. And since I am bringing in a lot of that demand now, the stock price goes even further. And that's typically what's called a short squeeze. So to recap, right? I bought a share. I sold a share. I shorted a share when it was 10 bucks, right? A year from now, it's at 15. All right. So I'm already down, but now I'm having to cover because my broker's like, yo, you're down like $500,000. You need to cover, you need to buy these shares back. So I go in the market and I have to now buy 1 million shares. And if I, let's say GameStop typically only trades, I don't know, a third of that, right? Like a small amount. I'm adding a lot of volume. And as a result, I'm driving the stock price even higher, right? So the share that I shorted for 10 is now worth 15. But when I go out to buy my shares that I owe the broker, right? I'm driving it from even higher than 15, right? That's typically what's called a short squeeze. And that's normal. You'll see short squeezes here or there. You'll see that happening in the general market. Short squeeze is totally normal. What's happening with GameStop that's a little bit different is GameStop was so shorted, so heavily shorted that at one point the amount of shares shorted were greater than the number of shares available in the overall float. So what is the float, you ask? And I know I'm covering a lot of definitions, but I just want to make sure that the general person who's kind of seeing this from the sidelines has all that they need to understand what is going on here. So the float is actually the total number of shares available to the public, right? To your average investor to trade, right? There are shares that, you and I can't go out and buy that are reserved for certain people. So that the float is, what can we as average investors, assuming you are an average investor, go out and buy? So a short float is the percentage of shares shorted the number of shares shorted, as a percentage of that, right? So let's say GameStop again, right? Great example. Let's say GameStop has 1 million shares in its float again, and 100,000 of those shares are shorted. GameStop has a short float of 10%. That's my understanding of it. Now, again, if you think it's different, drop it in the comment section. Would love to chat with you guys. That's a very simplified version of what a short float is. Now, one other thing that I want to share with you guys is, so GameStop's short float was at one point bigger, right, than the number of GameStop shares shorted was higher than the number of shares available. And how can that happen? Well, a couple of different things. Typically, it's a mixture of I borrow from my broker and then someone borrows from me, and that can kind of continue if that's a deal we have. Or, sometimes these brokerages will do what's called naked shorting, which means they'll allow you to borrow when you don't necessarily know where you're going to buy it back, because with companies like GameStop, at the end of the day, they're failing corporations, right? They're cool like 10 years ago, but now everything's so digital that people don't go into game stores, especially during a pandemic, to buy, the next CD of whatever game you're buying, right? You could do that now with Amazon and have 2-day delivery. You could do a digital game, whatever. So GameStop was struggling as it is. These companies shorted it, and now we're seeing kind of the repercussions of that. So what happens with cases like GameStop is, right, let's say I shorted, right? Going back to my example, I shorted the share. For $10, it goes to 15. Now I have to cover at 15, which actually drives the stock price to 18. And that 18 is where my buddy who also shorted GameStop with me gets a call from their broker and they have to cover at 18, but they've got more than 1 million shares. So then the share price goes to 20. These are all made up numbers and like it's a silly example, but that's essentially what's happening, right? So it's kind of like you have to topple the first domino over, and then that hits another domino, that hits another domino, that hits another domino. And so that's kind of what we've seen with GameStop stock, right? Let me go to the chart here. GameStop is actually, I don't know, you guys probably saw this. It was one of the top 500 valued companies. Technically would be like in the S&P 5, like top 500 most valued companies in the US based on the share price this week alone, right? This down here at like $10 or $20 was what GameStop is, you know, realistically, not even $10. I think it's like maybe, yeah, let's just call it $10. Now it's at 400. So that's what's happening, right? People buying, shorts having to cover, driving the stock price up. What we're seeing now, though, is a little bit of back and forth. So let me share it with you guys what my thoughts on this stuff is, because I don't want the average investor to lose a lot of money when they're, in fact, trying to make money. Initially, I wasn't sure why this was happening, and then a couple days ago I spent a little bit of time on Wall Street Bets, and I wanted to get an understanding of why this is happening, right? And it's really like, I don't know how to describe it, but it's amazing to see kind of everyone coming together on the internet to go against the big guy. Their kind of thought process is, look, these big guys have controlled the market for way too long. They get to drive market prices up. They get to drive market prices down. In the case of GameStop, if they shorted enough and the stock price keeps going down, well, the people holding GameStop kind of get screwed over, right? Even though, GameStop was probably going to go out of business, in my opinion, anyway. So unless they do something really different. So, but they're essentially forcing this to happen, right? And they can shift market one way or another by working with, these hedge funds and investment bankers working with each other to make that happen. So it's kind of like, the people on Wall Street Bet on Reddit doing the exact same thing back to them, right? They're working together to kind of screw them over. Now, someone who shorted GameStop way down here, like sub $100, maybe if they're, asked to cover, we'll have to do it in the 300s at really, really inflated prices. But the one thing that I do want to share, right, and because of this bigger kind of purpose to it, I'm not going to tell you to not do it. Look, if you want to do it, by all means do it. I'm just here to share the risks with you guys. And then, if you still want to do it, great. What I will say is, right, make sure, and this is kind of a general thing for the stock market, but more so here because the risk is just infinitely higher here. Do not put in money that you cannot afford to lose. 100%. Look, if $200 is the amount to you that if you put in and it goes to $50 or zero even, $200 is the amount you should maybe think about investing. Not saying you should. Maybe think of investing, because that 200 could become 300, could become 350, could become 400. It could stay 200. Hell, it could even go from 200 to 100, but you can say that you were a part of this takedown of these big bankers in New York, right? Or, and that's kind of, and you lose $200, whatever, right? You were a part of this. You don't care. You did something bigger than yourself, and your life is the same. Do not go out and like get a second mortgage on your house, or if you'd saved for something, take all that money and put it in. You can make money. Don't get me wrong. If you invested in GameStop at 100, you're 3x your money in like a week. But what you have to understand is, right now we're seeing a back and forth. So we're seeing, people buying and then these guys shorting more, and it's a back and forth. So we don't know what's going to happen yet. I do think once more people start to cover, the stock price will go up. But what you have to understand is, look, GameStop to 1,000, anything could happen at this point, right? Not saying it will, but it could. It's a matter of, what people want to sell at and what these people end up buying at, right? But what I want to let you guys know is that when it comes down, it'll come down probably just as fast. Because no one, when they realize that, GameStop isn't worth 300 bucks or 500 bucks. GameStop is still the same company it was a couple months ago when it was trading at $4, not 300. No one's gonna be there to buy those shares from you, right? So we could see, you know, maybe it gets to 500 and you're trying to sell your shares and all the shorts have covered, it could come tumbling down. So that's why I'm saying, you know, if you are in it to make the money, lock in profits along the way. If you're in it for a bigger purpose, make sure to only take the amount of money that you are willing to lose, and, you know, it wouldn't like significantly change your life. Because it's definitely an interesting time where all the little guys are coming together to take down the big guys. And understandably, right? Like these people, with all that they did in 2008, were never really charged for it, and they are allowed to, you know, continue doing things like naked short selling. So 100% there. Just want to share with you guys that, you know, just be careful. Don't, you know, go crazy with this in terms of your position size. If you're in it for the money, lock in profits along the way, because it could come tumbling down, right? What we saw this past week, you know, this red candle that we see here ranges from a low of 112 to a high of 483, right? So a stock price went from almost 500 bucks to 110. So that's dividing it by fourth. So again, if we see something like Robinhood has, I think, restricted it, a couple other brokers are restricting the amount that you could take on, that also limits the buying, which means the short squeezes might not go up as much as quickly. Again, I do think that once these shorts have to cover, it'll go higher, but it's a matter of, you know, what other factors are there. Is Robinhood going to come out and like block it again? Webull, you know, other people too, Tastyworks did that. So, and that's not necessarily always those companies, right? It has to do with the clearinghouses having to clear all these transactions. Anyway, not getting into that, but just be careful, you know, along the way. If you do decide to partake, do it in an amount that you're willing to lose. It's actually a really exciting time. I think we're gonna look back at this, and I think it'll be a significant kind of event that took place for Wall Street, and maybe, you know, teach these guys, the big guys, a lesson that, you know, the little guys can come together and actually hurt them. So we'll see how this goes. It's really exciting to follow. It's caused the market overall to have two pretty big red days, as some shorts are trying to cover maybe. So we'll see if that plays out. But, you know, hope you guys enjoyed this video. Hopefully it was a little bit clear. Hopefully you guys are making smart trading and investing decisions out there. Let me know down in the comment section what your trade plan is, and I'd love to chat with you guys down there. Lastly, remember to be a bit better every single day, and until next time.